Welcome back to the ETF Inspector. It's Saturday, November 22nd, about 5 o'clock in the evening. And this is our week look ahead and payment guesstimate video for 4 YieldMax individual income strategy funds. This is the $1 billion club, but if you saw in the thumbnail, there's an asterisk next to CONY, so they'll just have to be honorable mention because they have fallen out of the $1 billion assets under management designation. So we've got CONY, MSTY, NVDY, and TSLY. All right, we're going to take a look at how they performed over the course of the week and look at what we think the payments will be, and we're going to look at the week ahead to see where options are sold and get to see how much room to run we can capture in upside movement, things like that. All right, so I'm on X as well at ETF_Inspector1. Maybe if you're watching this video, it's because you clicked a link to the premiere. So I announced the premieres. I'll put the link in the first comment, and we'll go from there. All right, so first, let's. I'll try to. Hopefully, I'll remember to go back one by one. But we've got our week this past week for CONY down 12% over the course of the week. Now we do know that a portion of that is coming from the distribution, but it's not. I mean, it's not a whole lot. I forget. Maybe it was 6.5 cents or so. But they started the week right around 5 and ended around 4.40. So 4.41. So a rough week, obviously. Been a rough month for sure. So I would say we can probably right off the bat expect a lower distribution than the previous week, if that's what our week just looked like. It's worse than last week. Oh, wrong button. So we'll take a look at our spreadsheets. We're going to start with the trades. Now, they did have trades on Monday, Tuesday, Wednesday, Thursday, and Friday, every day. Brought in about $130,000 credit on Monday, spent $14.6 million on Tuesday. That's from having to close out a portion of the synthetic. Brought in just about $2 million credit on Wednesday. Had a nice credit of $13.8 million on Thursday, but a large portion of that was coming from adding to the synthetic. So it's really not like trading income, because if the synthetic's already way in trouble and then you sell more puts at that same strike, you're going to bring in a lot of money from those puts, but they're instantly underwater. So I don't really factor that as a major gain. And then again, closing out. So they had to keep on buying and selling of the synthetic. That's because people keep jumping in and out of the fund throughout the week, and that forces their hand on trades. So on Friday, same thing, resulted in a $2.6 million debit on the trading day, and overall a loss of $1.3 million over the course of the week. No point in dividing that out amongst the outstanding shares if it's negative, because that doesn't help us any. All right, we'll stay on that same. We'll try to stick with the estimate here before we move on to the week look ahead. So obviously we've got our guesstimate hidden right here. What we do know is we take a look at the 30-day IV. Well, we just look at the IV, but I use the 30-day because it's the easiest thing to readily accessible. I like to use Market Chameleon. So I take each one on Saturday morning once the whole trading week has been able to be analyzed and factored in. And you just type in each different one. I've got MSTR on the screen there, but I looked up all of them. And coin increased to 69% this past week. That's with that plus sign. It's an increase over last week. Last week they paid 6.35 cents per share. So with it being a trading loss, that doesn't really help us any. So then we just have to look at how the fund performed throughout the week. Not well. We take a look at the IV of the fund, and then we come up with our estimate. We also look at the synthetics, right? If the synthetics were worth a lot of money, then they would maybe add them into the payment throughout just to flatten things out, but they're currently costing a ton of money, so they're not helping anyway. So the only thing that's helping with our estimate is the 30-day IV. Everything else is pushing it down. And my guesstimate for this week is 5.86 cents per share. So I'm going all the way out to the fourth digit. I missed an announcement last week by, what's that, tenths, hundredths, thousandths, 10,000ths. I missed one by 5 10,000ths last week. So I'm trying to nail one right on the money. We'll see. So 5.86 cents per share is my guesstimate for CONY for this week. Full disclosure, I did not own CONY, NVDY, or TSLY. I do own MSTY out of this video series. Okay, declaration day is Wednesday the 26th. This week will be a little bit different than normal because Thursday is a holiday, Thanksgiving. So it'll be announced on Wednesday the 26th. It'll go X on Friday the 28th, and then you'll get paid on Monday, I believe, the 1st. There's also going to be some reverse split action taking place over the course of the 28th and the 1st. So if you don't have all that information, I don't have it memorized off the top of my head, but you're in luck. I made a video for it right there. 12 YieldMax income ETFs, including Ulti, are about to reverse split. So all the details. CONY's definitely one of them. I believe TSLY was too. But so go check that video out and to find out. I believe this one was one of the ones that was a 10 for 1 or a 1 for 10, 10 for 1. I don't know. And I can't remember if it was the 28th or the 1st where it was taking place. In any case, we've got all our updated holding information. They have synthetic combinations at 310 and 390 for December 19th. They're both horribly underwater, costing 200, 300, almost $400 million cost to close them out. They are really pushing the share price down. If the price of coin would go up and flatten these out, we would see an increase to obviously our assets under management and our share price. So these guys get an asterisk. They're honorable mention now. They're not even in the $1 billion club. Maybe we should push them to last for that moving forward. $840 million in assets under management. On Friday, people sold out of the fund 6,575,000 shares. That brought the outstanding shares down to 190,225,000 and the NAV to 442. Closing trading was at 441. So it's right there within a penny. When we take a look at the calls sold for the week ahead, they are not selling all that they can. So that means 35% of these contracts are uncapped. So if coin were to open up at 300 and right off the bat, all of these are blown through and in the money, 35% of them are uncapped and get to realize and capture all that gain. What it also means is we can get some upward movement next week and then sell some more calls and without having to buy to close anything. But for the time being, next week's expiration, the 28th, that's Friday, calls are sold at 245, 250, 250, 250. That always sounds funny. 255 and 260, 250. Anywhere from 1.9 to 9.1% out of the money. All right, that's all I have for you on CONY. Again, guesstimate 5.86 cents per share. Next up is MSTY. I take a look. MSTY had trades on Monday, Tuesday, Wednesday, Thursday, and Friday as well. Monday bringing in 1.4 million. Tuesday spending almost 14 million. But again, that's because of having to close out some synthetics. It's not losing. Nobody's losing their trades, selling calls in this market. Wednesday, they brought in $2.7 million. Thursday, brought in $35 million, but again, that's going to be because of selling some synthetics. So realistically, these kind of are offsetting each other. There was a closeout of 3,000 contracts. Did I pass it? There was an opening of 2,000, so a little bit of an offset there. And Friday cost 445,000 altogether on the roll, but that's also because there was a closeout of another 1,000. So realistically, they kind of broke even buying and selling their synthetics for the week and still brought in nearly $25 million on the trading week for options. That comes out to 9.27 cents per share. So that gives us our ballpark All right, when we flip the page, we see last week they paid 14.75 cents. I believe the week before they did as well. I just realized we didn't look at their chart, so we'll back up and look at that. 14.75 cents last week, a couple of 16s the week before, 19s, 20s. So 9 would be pretty low. We'll see if that makes sense. We'll take a look at their chart real quick. Obviously, it was a rough week for MSTY, down 14.5%, with a small amount of that, 14 to 15 cents of that coming from, let's see, will this change? Down $1.16, that helps a little bit better. So nearly 15 of that cents was from the distribution, but either way, still down over $1 over the course of a week. And when you're a $8 to $6 fund, $1 is a lot. So it was obviously rough. So that tells us our payment should be lower than last week. All right, so we earned 9 point something cents per share. We should probably be paying less than what we paid last week. But here's another thing. The IV increased by a lot. We're up to 91.1% implied volatility. So that's what we're going to kind of focus on along with the others when we come up with our guesstimate. And I said 12 cents. 12 cents is my guess for this week. Obviously, I don't think I'm going to hit this one dead on, only going out 2 decimals. But we'll see if how close I am. All right, there's $1.8 billion in assets under management. People sold out of this fund on Friday as well by a little over 4 million shares, bringing it to 269,450,000 outstanding. NAV at the close of trading on Friday, 685. Final trade on Friday, 683. So it's trading within a couple pennies, actually at a discount of a couple cents when things closed out. We've got synthetics, 4 different ones. I got them separated here. December 19th, 270. And then January 16th, 255, 270, and 300. Think of these as really placeholders. They're going to buy and sell, buy calls, sell puts at the same price. And that's just every contract is basically like owning 100 shares. So they've got almost 25,000 at this first one, 18, 30, and 34,000, and then multiply each of them by 100, and that's the equivalent of having that many shares, which then allows you to sell calls off of those. Now, if everything would just stay normal, that'd be fine, but they're going to move, and so they've all moved downward. So it's going to cost a lot of money to close these out. We're looking at over $1 billion worth of negative, basically, pressure. These are the reason our assets under management are down so low. So it's not like these are future problems that are going to take $1 billion off of our assets under management. They fall into this calculation. As you can see, 1.8 billion already takes into account all these negative hundreds of millions of dollars. All right, so that's the reason it's low, but that's not something to fear in the future when we close it out, because it's already being accounted for anyway. Now, if they go lower, obviously it continues to hurt. And so what that actually would look like is each one is showing how much it's realistically taking off of our share price. So if these would all get back to even, this would stop taking 91 cents off of our share price value, 57 cents, $1.09, and $1.63. So we'd be, $4 higher just if it wasn't for this. Obviously, we're not happy with a $10 or $11 MSTY either, though. Okay, as far as calls sold for this week, they're at 76%, so they still have, 24% uncapped that they can sell later in the week if they get an upturn after they get to capture some of that upward movement. Now, unfortunately, this has not been working well for us for the last handful of weeks because it just keeps dropping, so we would have been better off selling 100%, but they are still waiting for that rebound. Calls are sold this week at 182.50, 185, 187.50, 190, 192.50, 195, 197.50, and 200. Anywhere from 7 to 17% out of the money. So they are not playing these tight. They are expecting whenever that bounce comes that it'll be big. And it's making big downward movements, so it's safe to say, especially with a 91% implied volatility, that we could see a quick upward movement as well. All right, so 12 cents is the guesstimate. We'll find out on Wednesday morning, 6:55 a.m. Next up, we've got NVDY. NVDY had trades on Tuesday, Wednesday, Thursday, and Friday. Spending $1 million on Tuesday, closing out some synthetics, closing out more synthetics on Wednesday, spending another $2.1 million. Thursday, just trading, a lot of rolling to the following week, brought in nearly $10 million credit, and Friday, rolling the rest of things with no synthetics involvement, another $6.4 million credit for a total of $13.1 million in options premium collected altogether for the week. So that comes out to $12.06 per share. All right, so if we look at how that compares to our last distribution, 14.97 cents. So it's close, but it's a little low, and we don't think it'll be quite that low. Again, I just realized we're supposed to look at how they perform for the week first. So we'll switch over to NVDY for the week. Definitely not, it looks red and it looks ugly and all, but technically they dropped 61 cents. What does that come out to be percentage-wise? 4%. But they did, of that 61 cents, would we say 14, almost 15 cents of it was the distribution, not necessarily downward movement based on its underlying. So it didn't have a good week for sure, but nowhere near as bad as the other two. But so 12 cents, though, we still think is a little low compared to that 14.97. If we take a look at how NVDY has been paying lately, we got 14s, 31, 18. We do have 12s and 10s recently, and then before that, they were paying out every 4 weeks. So we have seen as low as 10. We've seen a 12.06, and they just earned 12.06. Is that what I said? Yeah, 12.06 this week. But their implied volatility's up from last week to 51.3%. So with a good trading week that they had and an increase in implied volatility and not that much of a downward movement, I think we're going to be above that 12.06, but below that 14.97 cents. So what I came up with, 14.4 cents. So very close to last week's. So we will find out on Wednesday the 26th. When we take a look, we got $1.5 billion in assets under management. On Friday, people sold out of the fund by 500,000 shares, bringing it to 109,125,000. The NAV is $14.58, and NAV is just what is a share worth. It's basically, here's the value, here's all the money divided by all the shares, equals the net asset value, and then your share price is just what the last person paid for it. So the last trade on Friday got a 2-cent discount from what the money's actually worth. They are selling 100% of their possible calls here. We've got synthetic 195s and 200s for January 16th. Both are underwater, roughly 9 and 11, almost 12%. So we're looking at a little over $150 million of negative that it's going to cost to close these out if things don't change. We got our options sold for the week ahead at 182.50, 185, 187.50, and 190, anywhere from 2 to 6.2% out of the money. Like we said, 100% of the calls are being sold. So, recap, 14.4 cents is the guesstimate, and they made 12.06 cents of that. So that's a nice percentage of it that would not be ROC. All right, last but not least, TSLY. TSLY had trades on Tuesday. I don't know why I got that line in there. They got trades on Tuesday, Thursday, and Friday. Tuesday was pretty simple. It was just closing out of a synthetic and then closing of the options that were sold off of that synthetic. That was a $1.8 million loss. Thursday, another closeout of the synthetic along with a decent amount of trading, but the closeout kind of overruled everything else because it cost about $9 million. But all in all, $14.9 million cost on Thursday. And then Friday, they brought in $8.8 million, rolling everything to the following week. So for the trading week, it was a loss of nearly $8 million. So that doesn't help us with our estimate. So next, like I always do, forgot to look at the chart. Next, we're going to take a look at how they performed throughout the week. And it was a down week, but even better than NVDY. So they had the best week of the four, only dropping 3.9% in a week. That's still a really bad week. I forgot to look at it. 29 cents was the drop over the course of the week, and almost 9 cents of that was coming from the payment. So it really wasn't horrible drop wise, but nothing moving down feels good. So right off the bat, we're lower than we were the week before, and we lost money. So those two things are pointing towards a lower payment. The implied volatility of the fund did increase this week to 55.8% though, but I believe, and then we'd look at our synthetics, both are underwater with a 450 and a 470 for January 16th. They are putting negative 183, almost negative $184 million worth of downwards pressure on the fund. So basically, all things are pointing to a lower payment with the exception of a little bit of an increase in IV. And so my guesstimate is 7.85 cents per share. So lower than last week by about a penny. By about a penny. Okay. Another one, I'm really going to have to rename the series if two of them drop below $1 billion. TSLY's got $1.08 billion, $1.083 billion in assets under management. People sold out of the fund on Friday, 1,650,000 shares, bringing it to under 150 million, 149,225,000. That gives us a NAV of $7.26. Closing trade was $7.25. They are selling 93% of their possible calls, so they got a little bit that's uncapped, 7% of these. What's that? 27, nearly 28,000 contracts. All right, calls for the week ahead are pretty spread out. We got a lot of them. All right, so I only talk about the highlighted one. Those are the sold calls. They do call spreads. All right, so they're going to sell a call and then purchase a call, and that kind of if you're not an options trader, you can look at it two different ways. It's going to limit how much you'd have to pay to close it out in the event that the stock price runs up beyond your sold strike price. Or you could also look at it as it's opening back up the upside. If the stock were to just keep on running, you're going to basically miss out on the money in between your short call and your long call, but then you're picking back up again beyond your long call in capturing value. All right, so calls are sold at 400, 402.50, 405, 407.50, 410, 412.50, 415, and 420. Then we skip down. We're selling some more calls all the way up at 440 and 442.50. These calls are sold anywhere from 2.2 to 13.1% out of the money. All right, I believe that is everything for the video. So again, guesstimate of 7.85 cents per share from TSLY. So, all right, if you like this content, please leave a like, comment, share, follow, all that good stuff. I appreciate it. And let other people know if they are looking for coverage. There's not a lot of investments where you get to see every single dollar, how it's moving, how it's working, and what it looks like moving forward into the next week. So these are pretty neat. But now that we're over, I got a dad joke, and then we'll get you out of here. So dad joke of the day: How do pieces of garlic seduce each other? They take off their cloves. That one's pretty good. All right, thank you. Go back to enjoying your weekend, and I'll catch you in the next video.